Welcome to Power Up Your Practice, the go-to podcast for law firm owners and managing attorneys working on the business, not in it. I'm Ruby Powers, your guide into the heart of law practice management, bringing your insights from leading legal minds, trailblazing attorneys, and expert guests who provide practical perspectives on running your firm more effectively and efficiently. And before we dive in, I'm thrilled to announce that my latest book, Power Up Your Practice, is out and available on Amazon. It's packed with actionable advice for growing a successful law firm. Be sure to grab your copy today. And don't forget to subscribe to our newsletter for exclusive tips and resources. And if you're enjoying this podcast, we love your reviews. They help us reach more attorneys like you who are striving to build the practice of their dreams. Prepare to open your mind, be inspired, and power up your practice to the next level. Thanks everyone for joining Ruby Powers with Power Up Your Practice. And we are here again. I'm excited to have Mills Bender. She is the founder and CEO at Mills Knows Bills. That's really hard to forget. And I love the publicity there with that. We met through someone recommending her as someone I should know, and she's spoken at some conferences with Ayla, and so we've had a great chance to connect before today. And I'll go ahead and let you. She's a passionate fractional CFO, speaker, and author. And she's helping empowering business owners to thrive financially. So we're going to talk about money, financial success, and some CFO type of stuff. So stay tuned, because you still want to learn this stuff, even though a lot of lawyers get a little freaked out. But we do want to lean in and get good at this. So Mills, why don't you tell us a little bit about yourself and what you're up to these days?
Sure. So I own a team of fractional CFOs. And so I myself am not in the position right now where I'm doing a lot of the work. I've scaled my business where I have great people who are even better than I am at doing the work. And we found that we love working with those types of businesses as well, the ones that want to scale and grow and possibly sell their business at one point. Personally, I'm located in Orlando, Florida. I've been married for a little over 7 years with 2 kiddos, but we work nationwide, and most of my network is nationwide, hence how you and I met, and we don't even live anywhere near each other.
It's more common these days than ever.
Yes, I started my business at the right time.
So in your bio, it says that you turned your financial struggles into a mission to help others manage their money with confidence. Why don't you walk us through a little bit of what you mean by that?
Sure. So a little over 10 years ago, I was at college. I woke up one day and I had $1.50 in my bank account. And I didn't really know how I got there, and I didn't know how to fix it. I didn't have savings. I didn't have a credit card. I was so financially illiterate, Ruby, that I didn't even know how to apply for a credit card at this point in my life. And like any good adult who's out in the real world and needing to manage money, I swept it under the rug and decided to ignore it and think that ignorance was going to be bliss. And very quickly realized that that was not going to be a long-term solution. And so over the course of my college career, I ended up changing my major to finance. I had 4 different internships during my university time in different areas to really learn how to manage money myself. But what I didn't realize is that although I was studying finance for a personal skill set I wanted to acquire, I very quickly fell in love with it. And I found that I was great at teaching others how to manage it themselves. And so a few years after graduation, I started Mills Knows Bills, or MKB, as a consulting company meant for business owners that were solopreneurs, or most of their income were sales-based commissions, and very quickly pivoted into fractional CFO work when my clients would graduate from the consulting program and say, you know what? You handle it for me. You implement it for me. And so we started doing the fractional CFO side and have really grown our team. We've tripled in size over the last 6 months, and we're excited for what this upcoming year looks like.
Well, that's really impressive and exciting. So for those who might not know what a fractional CFO is, why don't you walk us through what that
Sure.
entails, and maybe when you need one?
Yeah.
And what's
So,
the yeah.
and that's fair because it's really difficult to understand when you hear of a CFO and you think that's only meant for the Fortune 500 companies out there.
Yeah, I think there's that impression. It gets a little intimidating when you start using that.
In reality, like
Initially.
CFO sounds so like prestigious and unattainable that, maybe we're not approachable, but we couldn't care less about that. I think the best way to understand what a fractional CFO does is to understand what a bookkeeper and accountant are first. And so let's start with bookkeeper, because everybody knows as a business owner, you need to have a bookkeeper. It's their role to categorize all of the transactions in your business, money coming in, money going out, making sure that it's organized so that way you have books that are ready to file taxes. And typically with bookkeeping, that's done after the month has already ended, maybe a few weeks after the month has already ended. An accountant's role is to take that data from the bookkeeper, ask you a few questions, and then file your taxes. The accountant's role, though, is to file taxes based off of the data that the bookkeeper provides. Now, where the business owner tends to struggle is unless their degree is in finance or accounting, they don't really know how to read those financial statements. They don't know how to read the profit and loss, the balance sheet, the statement of cash flows, let alone make decisions based off of that information. And so there's this disconnect where they think that the bookkeeper is supposed to help them make decisions based off of that data, but really it's the bookkeeper's role to categorize the transactions, and that's about it. They think their accountant maybe should help them with making decisions in their business, but that's not the accountant's role either. It's their job to help you with lowering your tax liability, making sure that you're compliant with the IRS and state regulations, and make sure that you're in good standing in that capacity. So then where does the business owner get that help? That's the role of a CFO. The CFO's job is to take that data and provide proactive financial guidance. But for the business owner that doesn't have $250,000 a year lying around for a full-time CFO, or even 40 hours worth of work a week for a full-time CFO, how do they get the help? Well, unless you have a CFO in your business, you, the business owner, are the CFO. And so that's why we created a fractional CFO model. We work part-time on a contractual basis with our clients, giving them the time that they need at a fraction of the price, but they're not losing out on the quality. So they have somebody to bounce those ideas off of. They have that proactive guidance based off of that reactive data provided by the bookkeeper and the accountant. And so they're not the only one making the decisions moving forward.
This whole thing over 15 years of running a business has been sort of confusing because the way you described it, I've found some accountants not necessarily give a lot of tax reduction advice and just do like a bare minimum. I've also talked with, having a financial advisor who acted in some scope, more like a CFO in some respects of giving a little bit of financial advice. But like, I think if you had like a complete suite, you could have a bookkeeper, a CPA, a fractional CFO or CFO, and a financial advisor in a way.
Yeah.
There'd probably be some handful of overlap, but I think that's where, but I mean, when you start off, you barely have anybody in this list of stuff. And if you don't know what you're building up to, so that's why I wanted to have you on, just like get different perspectives on this, because we've only had a handful of people talk about these types of things on our show. But what I have found is that, like, I thought, yeah, the CPA's job was to like help me figure all this stuff out, and it's like, so I was talking to one recently, and he's like, and generally it's more of like historical data, and they take it and then they plug it in, but you're like, to make decisions, you need to not only look to the past, but you need someone guiding you and giving you some future advice, like, save some here, or, this is just all the different things that you can be thinking about. And yeah, what are some of the advice that a fractional CFO generally would be giving a small business owner?
I think the most critical part is cash flow. And so many people talk about how you need to know your cash flow, but what does that actually mean, especially for the business owner who doesn't know? Your cash flow is the rate that you have money coming out and the money that you have coming in. And so what we do is we project that out over the course of 13 weeks. And so I know where my clients are going to be 13 weeks from now, given the money we know coming in and the money coming out. And what that allows us to do is say, all right, you have a deficit over the next 13 weeks. You're going to start seeing that deficit at week number 6. This is what you can do to fix it. You can either cut these expenses, increase your revenue by doubling down on marketing over here or sales over here, or maybe you have a surplus. Over these next 13 weeks, you're going to be in your peak season. This is your optimal time to hire somebody. Make sure you have the money set aside so that way when you have your slower season come by, you can afford to train them because you've already set that money aside for them. And then after you're done training them, you have your peak season again, which then means they don't need time to be trained anymore. They can hit the ground running. And so a lot of times it's like taking those operational goals that we as business owners know we need, like I need to invest in new software or buy equipment or make that new hire, but giving the financial data behind it of when you can financially afford to do so or how you can financially afford to do so. Does that make sense?
Yeah, no, but I think a lot of business owners don't have the data that's
Mhm.
trustworthy and readily available,
Mm,
and or they don't have someone who can help interpret it like you're saying,
yeah.
to give some clarity. Because a lot of times, like even when I was starting out, like I didn't have that information readily available. Like I just knew how to read it or see it or whatever. And I was doing a lot of things myself like 15 plus years ago. And I pretty much just sort of hired on feeling. And I know you're not supposed to do that, but like, just like, okay, I'm starting to get overwhelmed now. I think we need to hire somebody, And it really needs to be a combination of like setting out your goals, knowing where you're going, how you're doing financially, and it shouldn't be just by feelings, and
Yeah.
so or at all. But you also know like your cycles, like in my
Mhm.
business, we're pretty busy from like usually like mid January, mid early February to like May, and then
Mhm.
again when kids go back to school like August to mid-November. And so I'm like, okay, we have to hurry and save the little acorns so that we have the food for the payroll during the winter and the summer when things, but getting that business in the pipeline. So anyway, I could see how does one if they're starting out and they're
Mhm.
probably still far away from being able to hire a fractional CFO, maybe, or maybe, I mean, how soon should a person hire a fractional CFO in your mind?
Well, first, you need a good bookkeeper primarily, because it doesn't
Yeah.
make sense to hire a CFO if there is little or inaccurate data to actually analyze, right? It's kind of like you're running before you learn how to crawl.
And
And
it's like
so,
that whole garbage in, garbage out, that expression I keep saying, like
yes,
really be able to trust that data. Yeah.
yes. And in fact, it was having trustworthy data was such an obstacle in my business that I decided just to hire a bookkeeper internally to make
Mm.
sure that the books were done properly. And so that's not a sales pitch in any stretch of the imagination. That's me saying if you're going to have a bookkeeper, make sure that your books are being updated at least once a month. You can make sure they're being updated at least once a month if you have access to the login of your data. You should also be talking with your bookkeeper at least once a month. But beyond that, you want to make sure that your books are giving you a story. I'll give you an
Mm.
example. I was working with a tax attorney, and bless his heart, he was making $1 million a year, and his revenue just said legal services.
Mm.
Thank you
Okay.
for telling me absolutely nothing about your business. Like that, it does. You have 4 things that you sell in terms of your services. Your revenue should be broken down by those different areas. So make sure that your categories are really detailed. You should have your revenue broken down by the different service offerings. You should have your expenses broken down as much as you possibly can. Don't just have subscriptions with subcategories for Zoom, for Camp Legal, for like whatever it may be that you have. Because the more detailed your books, the easier it is for you as a business owner to look at them and for things to make sense. And then you just ask yourself common sense questions. Was my revenue higher or lower last month? Why? How much of my money came from the same one client or one vendor? Do I need to diversify that? What did I spend on marketing and what was the return on that spend? You see, it's not like we do anything crazy at the end of the day. You can do 90% of it yourself until you get to the point where you feel like it's too much or you don't want to handle it, or maybe it's just not your zone of genius. That's when you outsource it to somebody like us. But if you're just getting started, the best thing you can do for yourself is make sure that you have timely, accurate, and detailed books. Then the rest is really just asking questions.
Yeah, that's a good point. And I've found over the years that sometimes so I have a bookkeeping inside my firm, and then we have a CPA firm that helps reconcile. And so I found sometimes that the CPA firm that I use will sort of just put a lot of stuff under office expenses or something. And I'm like, yeah, that does not tell me much at all. And so I remember going down in the nitty gritty one year and be like, we're going to label this stuff properly. And then, and so I can really know what's going on, or realize like, oh, whoa, we're spending that much on this. And, yeah, so I completely get what you're saying about that. And I also think that lawyers, get into this mindset that like, I didn't go to law school because I was good at math. Like, I'm not good at math or whatever. Like, they get, and I, even in my book, I said, like, let's stop saying that. Okay. Cause we're like propagating this self-limiting belief that we can't overcome and figure this stuff out. And even though we're not going to be the one who's in the nitty gritty unless we really love it, which most of us don't, but we still need to be able to know to double check our team and to see the big picture. And we need to be getting reports that we can trust on a regular basis so that we can be making decisions, and we can be having conversations with advisors we trust who can help us make those decisions. Should we hire this person? Should we change our tech stack? Should we, what should we be doing and invest this, or just sort of like play it safe and all those things. But I think those are all really good points. And something you said while we were getting prepared for this was that versus the difference between owning a job versus owning a business. I really like this because I think this goes to a lot of what I write and talk about. But what does this mean to you? And like, what do you tell business owners?
So first of all, neither one is right or wrong. It's really dependent upon what you want out of life, right? So the difference to me and the rest of my team is owning a job is something where if you don't show up to work that day, work is not being done, you're not getting paid. It is solely tied to you. Owning a business is when you can step away and things are still not just being done, but money is being made, right? That's when you go from active income, you actually doing the work, owning a job, to passive income, where this thing that started out as a job has now become an asset, it's become an investment that's giving you passive income, whether you show up or not. And so that's what we like to help our clients do, is go from owning a job to owning a business. Because at the end of the day, if you want to sell your business, you need to sell a business, not a job. No one wants to buy a job. They want to buy a business because it's an asset.
Yes, I think that concisely explains the situation. And I think one of the things I've seen that sort of helps indicate if you have a business versus a job is how long can you be gone and it still runs and it still brings in money, and you are not like the person who's like keeping it all together, like your fingers over here and then like you're duct taping it all together, like or like if
Yeah.
you were to go away, like a decade ago when I did the Goldman Sachs 10,000 Businesses program, I probably people have heard me share the story, but like I went away for like literally 2 or 3 hours to go to class. It was in the spring semester, so a decade ago. And like, it was just so real to me. Like I was a little afraid to go away from the office. And then like things would start falling apart and stuff. And what I realized was like, okay, this was a good exercise because I realized what would follow, what I hadn't built systems for and delegated properly, and et cetera, to be able to get away. And so, even though that's not, I don't think that was originally their intention. Maybe it was, there was actual academic training and the networking. But one of the biggest things I took away was just like what would happen when I would walk away from the office for half a day, a few hours, or a whole full day. And one of the things they were saying is like, don't log into your phone in your office every time you have a little break. You should network. And I was like, okay. But I was always trying to make sure it was okay. And then I think the other thing, what I've noticed is like during the summer or holiday time, can you go for a couple weeks? Can you go for a month? And the thing is like now we can pretty much work from anywhere for the most part. So then it gets a little tricky because you're like, well, but is it always because you're logging in and keeping things flowing?
Yeah. I agree with you. I think stepping away from your business for a period of time is a great litmus test to see what breaks. In fact, there's a mastermind group that I'm part of, and half the members in the group always say, I can't step away from my business. That's actually probably the reason why you should step away from your business for a few days. You need to see what breaks so you can fix it,
Yeah.
And I don't know about you, but I take the approach that nothing is unfixable. Like even if it breaks, you can still fix it. And so don't be afraid of it. See it, face it, then move on from it. But you're absolutely right. Like when you're living in this world of everything is remote, how much of it is staying afloat because of you? Like that's why I just don't even bring my laptop on certain trips. I'm like, I can't log in. I don't have access.
Well, that's bold and strong, and that helps you. My husband's always talking about like, well, it's good to unplug, and then I'm like, okay, yes, we need to unplug, and we need to regroup and everything. But anyway, we're still talking about finance. So there was, I think that's a really good point. And you and I originally, one of the first times we talked about sort of like how people can prepare their business, especially like a professional service industry business, for sale. And I think that is so critical. The building it, making a business with autonomous type of systems and its own brand, and it doesn't necessarily have to depend on you. So that's where you're going to get more value.
Yes,
as well.
Yeah.
So what you in some of our notes you said maximizing sales without compromising financial stability. What advice do you have in that respect?
So the first thing is, as a business owner, you need to identify, do you want to sell? Do you want to go through for a lack of better words, headache of scaling your business to the point of selling? And then you need to ask yourself, how much do I want for this business? How much of my retirement plan is based off of the sale of my business? And so if you know the end goal, and then you can work backwards and say, all right, well, given my specific industry of law, given where I'm located, this is the typical multiple that I can get for the sale of my business. That means my business is currently worth $500,000, but I want at least 1.5 million to walk away. Then you get to ask yourself, all right, well, what are the factors that are holding me back from getting that 1.5 million eval? Typically, it boils down to a few factors: profitability or earnings of the owner, how much time the owner is spending in the business, the amount of SOPs that they have in the business. So the standard operating procedures, how quickly somebody can be trained or brought onto the team if that business were acquired. And then any obstacles typically around the use of technology that's causing the business to not run efficiently. And so if you're able to solve those 4 problems and get closer to that valuation you want, well, now you know as a business owner, as a CEO, where you need to spend your money in your business, your profits, where to reinvest it back in the business so you can get closer to that number that you want when you want to walk away. Very often we see business owners that reinvest back in the business when in reality they're just buying an expense that lowers their tax liability, but it doesn't actually give them any value for it back. And so if you first need to identify what that end goal is for your business, that sticker price on it that you want, and then figure out those 4 areas that need to be fixed in order to get there.
So what are the 4 areas again, really quickly? Because I feel like you were talking, I was like, that's so many areas. I just like, because I was thinking about the sub areas.
I hope I'm not going to mess up on them. SOPs,
Yeah.
SOPs, profit,
Okay.
technology or streamlining issues, and then how much time the business owner is spending in the business.
And so on the how much time the business owner spends in the business, what are your factors in that? Like they need to spend more or like
That's really where
they
it's like owning a job versus owning a business. So
yeah.
is the business only running because the business owner's there? Or is it
Mhm.
running because their team is running it? At the end of
Yeah.
the day, when somebody is buying a business, they want to see if everything's going to fall apart if that business owner is no longer there. So if everything is weighted on the fact that you have the personal relationship with all of the clients or all of the referral partners, or you're the one doing most of the work, right? If you're not replaceable in the business, that's not sellable. And so in my opinion, when you get to the point where you start asking yourself, can I replace myself? Can I hire somebody and give them a salary and now I'm just an absentee owner in this? And if you can't confidently say yes, then you still own a job, not a business.
When I talked about this to law firm owners about the like you should work yourself out of a job,
Yep.
basically, they're like, oh, I like to practice. Why would I do that? I mean, no offense to anybody who did that in front of me, but like the thing is like be able to do it so that you
Yep.
could do what you want. Like if you really love whatever X, then but you don't have to do it. Like you
Mm-hmm.
could do it, and like that's the beauty of it, so that
Yeah.
it's not depending on you having to show up to do it.
Mm-hmm.
So completely agree. And the other thing, like the lots of stuff around reading all this stuff, Goldman Sachs, and so many things. Is like you need to have the end in sight. You need to know where you're going. And I think law firms were only able to sell in like 30, 40 years. It's so ridiculous how recent it is. It's like in my
Yeah.
lifetime, it feels like. Um, and then so they usually just think that it's your goodwill and their name, but like there's so much more to it. Your book of business, your operations, like you said, and repeat business as well. And so there's a lot, intellectual property. There's a lot to
Yeah.
it, and we've had maybe 1 or 2 sessions on this topic. But I really like sharing this type of ideas because I think a lot of law firm owners are a little bit amiss of how to get the greatest value, and then like really needing to think as many years in advance about where they want to go so they can work backwards. And I
Mm-hmm.
think there's also good advice, just always be ready at any moment, that you be
Yeah.
sale ready at any moment, just in case you needed to, like maybe
Mhm.
the market's hot and something happens, you're like, I'm going to peace out. So,
If you're preparing for it, then when the opportunity presents itself, you're able to snag the opportunity in comparison to your competitor who wasn't preparing for it. And
yeah.
there's so many business owners who write off SOPs as unimportant. I'll give an example of a client who's actually going to be acquired within the next 45 days from now. He's in a different industry. He's in home services, but on paper, this guy is maybe worth $500,000. Maybe. Okay.
Okay.
He got an offer for $5 million because of the amount of SOPs he has created in his company.
Okay, let's stop everything. Let's read our SOPs right now.
Are you finding yourself overwhelmed with handling phone calls and spending endless hours on consultations that just don't qualify? Well, let me introduce you to Staffy Live, your ultimate solution for 24/7 live receptionist and intake services tailored specifically for law firms. Now, picture this: empathetic, truly bilingual specialists who understand the intricacies of client care and are experts at asking all the right questions to qualifying callers efficiently. Now that with Staffy Live, you'll feel like you have a trusted partner by your side, ensuring only qualified consultations make it on your calendar and providing valuable follow-ups when needed. As someone who's been using Staffy Live for my own law firm, I couldn't be happier. And I guess what Staffy Live is now offering, a generous 15-day free trial with no strings attached. You can head over to staffy.cc. That's stafi.cc and click get started. And don't forget to use the code RUBY, RUBY. Your future self will thank you.
Honestly, he's worked himself out to the point where the PE firm who's acquiring him has no questions about the structure, the strategy, the training, the timeline to get somebody trained, the KPIs to track to see if that new hire is actually going to be a good fit over the next 30 to 60 days. I mean, it is such a robust system that he's getting 10x what he's actually worth on paper. Now, I say this with a grain of salt because the industry that he is in is incredibly coveted, and there's not a ton that are great. But the reason he was able to get 10x what he's actually worth is because of the SOPs. So,
okay, well, this is a success story. Encourage us. Yeah, because like usually with law firms, I think we usually hear a max would be like a 3x or something along the max. But
when I say 10x, I'm saying so 500,000 is already 3x his earnings.
Oh, okay.
Okay. So he's already on paper. If somebody were to acquire it, he'd be worth $500,000. He's getting 10 times the amount what he's actually worth of his earnings because of the SOPs.
Well, that's encouraging, and I think we should all stop whatever we're doing and go work on our SOPs, or have our staff go work on it. Before we start closing up, I wanted to go over this bullet because avoiding common financial pitfalls. Like, what are some of the most common financial mistakes business owners make, and how can we prevent them?
So there's actually 5. The first one I would say is no planning. And so a lot of business owners will just kind of, I don't know the common phrase, like fly by their seat of their pants. Whatever it is. You know what I'm talking about. Which you mentioned it earlier. It's a lot of times people would go with like their gut or their intuitive spending, you know, and I'm not saying that you should completely ignore that. I think it's incredibly interesting how close business owners are to their gut on the data. I can't tell you how many times a business owner will say, I need 12K to break even. And I look at the numbers, I'm like, 12.5, like that's not far off, you know? So that's not to say discredit your gut, but you need to make sure that you are implementing planning. You need to have an idea of where your financials are at. You need to have a budget because then it helps you with your cash flow and making operational decisions based off of that cash flow. The second pitfall is business owners who use they combine their business and personal finances. They're using their business bank account as their personal piggy bank, or they have some expenses going over to their personal versus business. Like it's
legal in terms.
Yes. Right. Not only is that hurting your valuation number, it's giving you inaccurate data to then make decisions off of it. So please stop. The third pitfall is avoiding their finances. They think that ignorance is bliss. It's not. If you're afraid of it, the more you look at it, the less scary it actually becomes. So the last 2 pieces are little to no savings. So always reinvesting money back into the business and not actually building that emergency fund. That's causing you to stay on the hamster wheel of always having to make more money. And then the fifth one is unbalanced leverage. So whether you have too much debt or very often too little debt, you're in a situation where you can afford to get a line of credit, not actually have to tap into it, but you wait until you need the debt to get it, which means you're getting a really bad APR or repayment terms.
No, I think that was a very concise summary of like the key points that I've learned a lot of those things over a long time of different sources or courses or ups and downs or different things. So that's really good advice. I remember learning what a line of credit was a decade ago, and they said get it before you need it, and I was like, okay, yes, sir.
Yes.
And and so have a relationship with your banker. Make sure that
Mm-hmm.
get the things before you need it.
Mm-hmm.
So that's really good advice. I think a lot, and I like the one about like if you're sort of afraid or intimidated or overwhelmed,
Yeah.
lean into it. Like don't let yourself be afraid. I've working right now to really up my financial um, knowledge even and I so a friend of mine who's a fellow business owner gave me like a list of like 20 books and I'm like empowering. I've read like 4 or 5 in my past life, and it's like The Richest Man in Babylon, and there's
Mm-hmm.
Profit First. I read that, but let's see, and I mean, I don't think you put The Millionaire Next Door, but I like that one. But the one I just read recently was the Wealthy Gardener. I don't know if you ever heard of that
I
one,
haven't
but
read that
it's
one. Mm-mm.
really good. It's so good. I'm like reading it a second time in the last couple weeks, which is really ridiculous because I don't have a lot of time. But I'm going in like really trying to internalize all the good stuff. But anyway, so now it's our time to ask you some rapid fire questions. So my first one is going to be, what is your favorite board game or game and why?
I love Monopoly. Which
Okay.
is in true fashion. But in all honesty, I've always loved Monopoly. There's just something about building something out of nothing that's really cool to me.
Interesting. Okay. What's your superpower?
Planning and organization.
Ooh, I don't know if anybody's ever said planning. Interesting. Of all our guests. Okay, what is a habit that you recognize has helped you be successful besides planning?
Time blocking.
If you want to lean into that one.
I
Which
mean, planning, which it kind of comes with it, but time blocking. So I live and
time?
die by my calendar.
Okay. Okay, awesome. Yeah, I've written and talked a lot about that, and I think that's so critical and it helps you stay focused on your
Hmm.
different tasks and just keep your brain at its optimal. What's a favorite podcast or book that you would say like I've got to share this? Just like I was just sharing a book recently.
I love Atomic Habits by James Clear.
Yeah, I saw him at CleoCon. He was one of the keynotes, and even though I had read most of the book before, like just hearing him like summarize the highlights and just hearing it and feeling it, it just was like, oh yeah, this is good stuff, And that's actually where I added the habit question recently because I was like, there's always something behind the scenes that people don't know what makes
Yeah.
a person successful. Like I think a lot of times people are like, oh, they're lucky or something.
Mm-mm.
But I'm like, no, they're probably like, working out, waking up, doing affirmations, reading a lot, talking to
Yeah.
mentors. There's probably a whole lot of stuff behind the scenes, constantly learning. And
Yes.
that's why I like to add that habit one because I'm just like, I'm trying to like, figure out what I could add to my list of stuff to um so how can people find you and reach out and stay in touch if they want to hear
Sure.
more and learn more?
Website would be the most convenient way, millsknowsbills.com. On there, we have the way to contact me, links to our content, sorry, as well as any of our upcoming workshops or speaking engagements.
Awesome. So today we walked through a whole lot of information about like what is a CFO, why you would need a fractional CFO at your firm or your business, the difference between owning a job versus owning a business, and then a lot of information about like maximizing the sale of
Mhm.
your practice and some key points on how to maximize the value, and then also 5 key avoiding financial pitfalls that we would want to avoid. So I think I'm going to have to re-listen to this, even though I listened to it the first time, and make sure that I'm putting in place all these good nuggets. Yeah. Well, thank you so much, Mills. It's been great getting to know you better. And thanks everyone who's listening. Feel free to share with a friend. Feel free to give us a review for Power Up Your Practice. Also, the book Power Up Your Practice is available on Amazon. And in between your podcast episodes, you can definitely check out our Power Up Your Practice Facebook group where you can keep the conversation. So thanks everyone, and we'll see you next time.
Thank you for tuning in to the Power Up Your Practice Law Practice Management podcast. I'm your host, Ruby Powers, and it's been a pleasure sharing this time with you. If you've enjoyed this episode, please take a moment to leave us a review, tell someone else about us, and we'd love to get this podcast shared with others to reach more listeners like you. Don't forget to subscribe to our newsletter for exclusive content, tips, and updates straight to your inbox. And exciting news, our book, The Power Up Your Practice, is out and available on Amazon. It's packed with strategies, 25 chapters, to help you elevate your practice and achieve your goals. So join us next week as we dive into more advice and insight on law practice management. We'll see you next time.